one of the key fundamental innovations of the crypto space, quite frankly, is to launch a token that can have network effects and where you can have value accrual of the network. That in and of itself, I don't think should be forgotten. It's a very novel way to do capital formation, which we as, being active in traditional capital markets and putting traditional financial assets on chain, it's a very interesting concept for us to also look at.
Do you think by 2030, we're going to have full 24/7, 365-day markets?
Probably, to be honest.
This episode is brought to you by iTrust Capital. iTrust Capital gives you a great alternative for buying, selling, and custodying your crypto assets. They allow you to set up a self-directed IRA, which gives you huge tax advantages. You can even roll over your 401k to this platform. And they not only offer crypto, they also offer gold and silver. And as mentioned, the custody gives you another very safe alternative. So many of you know about self-custody. That's a great option, but you can also use iTrust Capital's premium custody accounts, also known as PCA. So with the rise of crypto scams and phishing attacks, a lot of retail investors are losing their shirts. I mean, let's be honest, right? It sucks to hear that exchanges are getting hacked. Well, iTrust Capital does things a bit different here. They use Fortis Bank as their qualified custodian. So they're actually using a bank here, and they have partnerships with Coinbase, Prime, Fidelity, and Fireblocks. They are fully US based and their client experience team offers direct phone support. So not many platforms offer this. This is very unique to iTrust Capital. And folks, most recently, we heard from President Trump that the United States is looking to unlock 401ks to be able to participate in crypto. Well, you can get ahead of the curve by using iTrust Capital and getting started in that process. And folks, I'm a user of the platform. I have an account with them. If you sign up with my link, which is itrustcapital.com/thinkingcrypto, you can get an exclusive $100 funding bonus. So go learn about this great, safe, and awesome way to buy, sell, and custody your crypto. A great alternative, once again, with tax advantages and a lot of safety, very safe compared to many exchanges. And all the links will be in the description. Check it out. Hey folks, welcome into the Thinking Crypto podcast. I'm your host, Tony Edward, and my guest today is Ian Bode, who is the Chief Strategy Officer at Ondo Finance. Ian, great to have you on.
Great to be here. Thanks for having me, Tony.
Ian, as we were talking about before the recording, I'm a fan of Ondo. I'm an Ondo token holder. I love what you guys are doing. So I'm excited to dive into the details about all the great work and initiatives that you and the folks there are working on. But let's kick it off with your background. Tell us a bit about yourself, where you're from, and your professional background.
Yeah, 100%. So I'm originally from Belgium, born and raised, came to US in 2013 for business school, decided to stick around. By training, I'm actually an engineer. I used to work at a semiconductor company as an R&D engineer or product manager. But that feels like forever ago. This post business school, I actually worked for almost a decade at McKinsey and Company. That's the consultancy shop. I ended up managing all of their work in digital assets. So working primarily with all of the TradFis on what are digital assets, what are they not, what can you do with them. And about a year and a half ago, I joined Ondo as the Chief Strategy Officer, really to focus on obviously the strategy, corporate development, go-to-market, all sorts of fun things that you get to do at a ultimately small startup.
Absolutely. So was your first encounter with blockchain and digital assets and crypto at McKinsey, or did you hear about it before? You know, some people have heard about Bitcoin and they're like, man, I wish I paid attention.
Yeah, well, it's funny. I'd heard about Bitcoin, but it never really did it for me. Although, as I'm longer in the space, the more I appreciate the OG. But the moment I read about Ethereum, that's when it clicked. All of a sudden, I mean, at the time, even at McKinsey, I was doing some work in financial services with some of the TradFi giants, and I was just kind of shocked at how inefficient the system was, quite frankly.
Sure.
Um, and then when I read about Ethereum and the whole concept of smart contracts, tech stack that could operate 24/7, I mean, mind you, this was pre-DeFi, so
Mm.
I hadn't really seen it. But conceptually, the whole concept of having a smart contract that could execute code 24/7, that could do basic functionality that finance did, that really spoke to me from a very early on. So I ended up then trying to do as much blockchain work within McKinsey as I could. I couldn't really leave McKinsey primarily due to visa reasons. So if I wanted to stay in the US, I couldn't really leave McKinsey. So that caused me to, at a very early onset in my McKinsey career, try to do as much blockchain work or crypto work as I possibly could. Back then, there wasn't a lot.
Sure.
The first project I did was on tokenization actually in
Mm.
2016 for some French banks.
Wow.
Um, and back then it was all, blockchain, not crypto. I mean, there's still some of that, but increasingly less so. But that was the first time that I did anything professionally with blockchain back in 2016.
Wow, that's fascinating because that's so early in 2016. I don't think I got into the market then. I didn't hear about the word tokenization till years later. And then you mentioned, the dynamic between blockchain and crypto because there's always been the kind of the narrative battle taking place, but you need both. I mean, you can't have a public blockchain without with some sort of currency greasing the network. And I think people don't really recognize that.
Yeah, no, 100%. I encountered that so many times with a lot of these transfers of like, oh, but I like blockchain, but I don't like crypto. And I was like, well, you can't really have one versus the other
Right.
because otherwise, how are you going to essentially pay your validator network to make sure that it gets included? And then they're like, well, why don't you just use cash? I'm like, well, you can, but that's not necessarily a decentralized system. So you had to like walk them through the concept of why does a native asset to a chain make sense in the first place. Needless to say, a lot of the TradFis just don't get it
Mm.
because for a TradFi, they have to meet certain compliance requirements anyway. So the whole concept of a decentralized system is very foreign to them. Because all the time they would then ask the question, but like, what's the throat to choke? Like, where is a regulator going to go? You're like, well, that's kind of not how the system is ultimately designed per se. And you have to get into the nuances. So there was a lot of education to do, which I think in part is why this whole concept of tokenization of traditional financial assets and adoption by the TradFis truly has taken, quite frankly, over a decade.
Sure. And then it's also maybe a very foreign concept where you have the convergence of a network with a currency or something that holds value. Because before it was just here's the protocol. There's a company behind it. Maybe you get shares, private equity, IPO, yada yada. But for the first time, you have this convergence. So I think for a lot of people, even retail outside institution, they're like, so why do you need the token, or why do you, what's blockchain and what's crypto? It's like hard for them to understand its paradigm shift.
Yeah, no, 100%. And I mean, quite frank, I mean, that's why it's a journey. I feel like everyone who gets into crypto has a million questions, and it just takes some time for you to ultimately work through all of them and to really get what this stuff is about.
Mm,
And then, you ultimately also start to appreciate and realize that it's kind of all of a spectrum. Like decentralization is a spectrum.
yeah.
The trust assumptions in an asset, that's a spectrum. So it's a very nuanced and complex space that just requires some time to work through. And quite frankly, you even see it now on crypto Twitter in the crypto space. These days, there's a lot of these RWA issuers and providers that are starting to build these purpose-built chains, right? Like Temple and Arc. And you get a lot of debate around, wait, is that really a blockchain? Yeah, those debates have been around for 10 years and I don't see them stopping, quite frankly.
For sure. Yeah, and time will tell the winners and what the market wants and what gets real world adoption. I think there's a lot of players right now, which is this is a normal process. It's healthy as well. Trying to figure out maybe there are some solutions that exist that don't have a problem, but there are certainly folks like I believe like you guys on it. I'm not saying that because you're on the podcast, but I believe what you folks are doing. We're going to talk about Ondo global markets and so forth, but uh, you're really building a key infrastructure item for the adoption of the technology and tokenization and much more.
Yeah, 100%. With a lot of crypto, I mean, crypto sometimes gets a bad reputation because a lot of people in crypto think, build it and they will come.
Yeah.
And that does not necessarily how things play out. Yet at the same time, I think you can credibly say that a lot of infrastructure that has been built in crypto initially was build it and they will come. And turns out a lot of these crypto engineers and developers were ahead of their time and built something that maybe at the time wasn't necessarily needed, but 3, 4 years down the line, people look at that and say, "Oh wow, that's actually pretty innovative." So I think, time will tell to your point on how this space plays out. It's kind of a cliche, but I do think ultimately we are still pretty early. But sometimes when you look at some of these crypto prices, that's hard to believe.
Yeah. It's so fascinating, the two ends of the spectrum here with the building, but also the speculative aspect of the coins, which it is what it is. Human beings are speculative, markets are speculative, and it happened in the dot-com boom and the real estate boom and all these things, so can't escape it.
Yeah, you can't escape it. It's human nature, I believe. But one of the key fundamental innovations of the crypto space, quite frankly, is to launch a token that can have network effects and where you can have value accrual of the network. That in and of itself, I don't think should be forgotten. It's a very novel way to do capital formation, which we as, being active in traditional capital markets and putting traditional financial assets on chain, it's a very interesting concept for us to also look at.
Yeah, let's talk a bit about that because it's still something I'm noodling on, and it's so fascinating, and I try to explain it to people because they ask, "Why is this meme coin worth money?" And I try
Mm,
to explain network effects, Metcalfe's law and Reed's law that, take the real world, or I should say not the real world, but the non-digital world, politics, religion, people who crowd around a movement, that's a network being built there, but it's in a digital form, and there's a financial component to it. So that's all it is. It's people coming together agreeing this has value. We believe in this, even if it's a silly meme, right?
hmm Yeah, I mean, there's two schools of thoughts in terms of what I mean. There's price and there's value, right? And people conflate the two often. I think that the dominant school of thought is that the way to value any type of business is to look at the underlying cash flow that it generates. How much of the cash flow does that, when I hold a particular instrument, does that give me claim to? And as a result, how much is that ultimately worth? Um, that clearly it has some merit to it if you look at how a lot of companies are valued and dividend payouts and the like. But I think the reality is that oftentimes whatever you end up paying for something is the price of the asset, and the price of the asset is dependent on how many people that want to buy a particular thing, right? And so there are a lot of things that people are willing to pay money for, but when you look at the underlying value from a cash flow perspective, it's not really there. Does that mean that the price that people pay is unreasonable or not right? Well, to be debated because people clearly pay the money for it and are willing to pay for it. So I think it's just different schools of thought, whether you look at price or value, and it's a very complicated discussion to have, quite frankly.
Absolutely. I feel there's going to be a lot of studies about these things by future generation.
100%.
Like, why is Dogecoin on the rise? Right. Right.
Oh boy, the memes, yeah, it's
Yeah,
quite something.
it's so funny. It's like human behavior on the blockchain. It's so fascinating. I'm curious, what your perspective is of your time at McKinsey and, even going back to 2016 and now where things are at. I mean, Ian, it's an amazing growth and surge of adoption by TradFi. Are you blown away by the amount of adoption we're seeing?
Oh, for sure. And I mean, relative to 2016, yes, but even relative to, quite frankly, to 2023, it's just night and day, right? I think the space has come a very, very long way. The infrastructure has been developed a lot more than back in 2016. The liquidity that's available also grew quite a bit. I mean, this really is the innovation of the stablecoin. That really was a key unlock for this entire space to really mature and unlock. Because you could have crypto that was, around in the ecosystem, and you could even put traditional financial assets on a blockchain, but all the way back to 2016. But what were you going to do with the actual settlement of these instruments? You needed a cash leg, which ended up being a stablecoin leg. So stablecoins truly were the first 0 to 1 innovation, I think, in how to make all of this work. Which back in 2016, obviously, I mean, stablecoins existed, but they were so small, it didn't really matter. I think DeFi was the other massive 0 to 1 innovation where all of a sudden people could actually see how this could work in a 24/7 autonomous fashion. And there was a ton of innovation happening back in 2020, 2021 in the space. And then the last thing that really unlocked post 2023 really is the regulatory clarity and the attitude of the regulators. I think that was the final key unlock that really needed to happen. Where the ETFs played a very interesting role ultimately, right? That was the first introduction of crypto into the mainstream, where it was very, very clear that there was a ton of untapped demand and crypto ownership and appetite was a lot broader than I think what the other administrations had expected. And I think that created a lot of visibility for the space. Obviously, the Trump administration right now is very crypto friendly and wants to make America the home of crypto. So all of those things combined over the past 10 years, I think have finally led us to this moment. And the amount of TradFi interest and almost FOMO, quite frankly, that I see in the space is really incredible.
Yeah, I mean, the names that are involved, and we're going to talk a bit about some of them that are using Ondo and partnering with you. But before we get ahead of ourselves here, give a quick overview of Ondo for those who may not know. What is Ondo and how does it work and things like that?
For sure. So think of Ondo as a company. We put traditional financial assets on blockchain rails and make them available to a global audience. This is really what a stablecoin piloted with cash we do for treasuries, stocks, and ETF.
Mm.
We also develop the services and infrastructure to make that issuance and distribution process more seamless and to give real utility to these assets. We did that back in the day when we developed the Flux Finance protocol, which was the first example of how a repo market could work with tokenized treasuries as collateral. So we started our entire journey really, I'd say back in 2022, 2023 by tokenizing treasuries in the first instance. We looked at stablecoins as having product market fit. Stablecoins are beautiful products, but they're not perfect. They actually don't give you very good investor protections and they don't pay out yield to their holders. And so to solve both of those issues, we believed that a tokenized treasury fund with a lot of investor protections was actually the way to go. We started doing that with a product called OUSG. It's a permissioned tokenized treasury fund. At the time, it was pretty innovative because it was the first time that a tokenized treasury fund, which is essentially security, could be transferred peer to peer on chain as long as you were onboarded with us. Yeah, that also meant that you could whitelist a smart contract to then use this asset as collateral in that ended up being Flux Finance. So we started really with the first peer-to-peer transferable tokenized treasury fund. We have since expanded that mission to tokenize other tokenized treasury funds that are permissionless in the secondary market, very much like a stable coin, but it still pays out yield on a daily basis. And most recently, we also launched Ondo Global Markets, which is a platform to tokenize any stock and ETF that you want.
So let's talk a bit about Ondo Global Markets. So essentially, any institution can come plug in, launch their tokenized asset, and push it out to the market.
We can actually do that with no permission even needed. So any stock or ETF that is traded on your traditional financial exchanges and is available in a normal brokerage account, we can put that on chain now and make that available to non-US investors in the primary market. So think of a
Wow.
global audience. These assets are in a stablecoin-like format, so they are permissionless in the secondary market, meaning that you can use them in DeFi however you want, 24/7. They are all fully backed, one for one. So for every token that we issue, there is let's say it's a tokenized Tesla token, right?
Sure.
There will be Tesla stock sitting in a brokerage account that is immovable, plus a large collateral buffer on top so that people can rest assured that there's always enough collateral backing the tokens out there. And ultimately, the benefit of the platform that we've developed is that we can put any stock and ETF on chain, which is very helpful for a lot of the crypto exchanges and the crypto wallets that really want to offer their users access to these stocks and ETFs. But for them to work with the traditional financial system is a lot more complicated than if they can just use tokenized stocks and ETFs, where the settlement can happen in stable coins. These things can trade 24/7, all sorts of benefits relative to the traditional system.
Ian, a question I have, and it's not just specific to Ondo, but just in general. When the tokenization of an asset takes place, and I think you touched a bit on this, that the asset sits in the brokerage. But how do we verify that? How do we see the bridge that connects the tokenized asset on the blockchain to the physical asset, whether it be gold or if you're tokenized real estate or if it's stock? Where can one say, I need to see that bridge where all this is connected.
Yeah, it's a great question. Because ultimately, when you tokenize something, trust and transparency is incredibly important,
Yeah.
right? You can put a stock on chain and it's a synthetic asset, and you can claim that it's a tokenized stock. But if there's nothing backing it, I would not recommend that anyone buy it. So we take a lot of pride in the fact that all of our assets are fully backed. We actually, the tokens that you hold on chain, they're tokenized notes. It's a debt instrument relative to the issuer of the tokens.
Right.
That issuer can issue these tokens that is really debt, and they then hold the assets underlying or backing that token in a clearing broker account plus a collateral buffer on top. We have done this the similar structure that we did for USDY, that is that permissionless tokenized treasury product. We've had it for about 2 years, give or take, out in the market. We have an agreement with a third party agent. It's called a collateral agent. They have access to our brokerage accounts. So they can, literally just see the value in the account on a daily basis, make sure that whatever we are holding, that we say we hold, we actually hold, and that we have everything fully collateralized plus the collateral buffer on top. They post daily attestations for everyone to see so that anyone can go to our website and take a look and say, hey, it's really fully backed. They also have a legal obligation that when we as the issuer fail to meet a redemption in a timely manner, or if they look at the account and say, oh, it dropped below a certain level, they are legally obligated to seize all of the assets, sell it for cash, and repay the debt holders of the issuer, which is really the token holders in the first place. So these things are structured in a fully bankruptcy remote way. When you hold a token, you actually have a security interest in the collateral that is perfected by a third party. And that third party also posts daily attestations that anyone can take a look at.
That's great. Great to hear. And then is there ever a situation where the tokenized assets need to be in a custodian, or is it
Mhm.
just all in smart contracts?
Well, so the underlying sits in a custodian, right? So the actual Tesla shares or the actual S&P 500 ETF, that all sits at the actual
Right.
custodian. We issue the tokens against that. These assets are immobilized, so they can't move. But these tokens then obviously can freely float wherever. You can use those tokens at a custodian too if you want. If you're
Right.
holding them and you don't plan to move them anytime soon, we
Sure.
do have support from some of the major custodians in the space so that also an institution can feel comfortable custodying these assets in the way that they want.
Got it. Got it. Thank you for that insight because that is a question I've had once again, just in general. So great to get that insight. You mentioned the tokenization of stocks and the ability for people around the globe to access certain markets and assets they have never been able to. And I'm not sure how many people know about this, but if you're in some country in Africa, you can access the New York Stock Exchange, or if you're in Latin America, right? But now you can, and that could change your life, opening up investment opportunities, wealth opportunities, and obviously some banking opportunities with stable coins and so forth. So tell us about your plan to expand to other markets. And are there regulatory hurdles or not necessarily yet?
No, yeah, great question. So I fully agree with your point in that this is really initially a global access play. The number of people out there globally who clearly want to have access to US capital markets and invest in it is pretty substantial, right? We as Americans, we don't fully appreciate how difficult it is in many jurisdictions to get a brokerage account. And even when you can, the fees to buy any of these products, both FX fees and then just normal, buy and sell fees, are quite frankly absurd,
Mhm.
right? So we are very excited to have a platform that we can put all of these US capital market assets on crypto chain and make them available to that global audience so that anyone that has a stable coin can ultimately acquire any of these assets in the secondary market. So that is a pretty meaningful innovation in and of itself. The These things are permissionless bearer assets, right? So in the secondary market, they can flow wherever. It's very similar to a stablecoin. Stablecoin you can send wherever you want to. If you engage in a peer-to-peer transaction with a stablecoin, or if you use it in DeFi, there's no regulators going to tell you, hey, you can't do that, right? But if there is a, call it a centralized platform that decides to market these assets in a specific jurisdiction, and, has billboards in a country that says buy tokenized stocks now, that probably needs a license. So it kind of all depends on how it's implemented, but fundamentally, our platform is set up in such a way that these assets are available to a global audience. Anyone with a stable coin can find their way.
Going back to what we were talking about earlier with network effects, is this going to change markets forever and even private equity markets? Let's say the SEC opens up accreditation and private companies can, get their equity out there in a tokenized format. Plus you have the tokenized equities and stocks and so forth, that now you have liquidity coming in from around the globe, which once again, we've never had that before.
Yeah, never had it before. It's a great question. I'm not sure how exactly it's all going to play out, if I'm being honest. It'll probably take some time. But if we talked a little bit about, education, and it just takes time for people to appreciate what this stuff is, I think the same thing's going to play out with tokenized stocks. Because the number one question we still get is, why are you tokenizing stocks?
Yeah.
Right? Like, why? Why not like real estate? Because most people, when they think of tokenization, they think of real estate and other types of asset classes. We've always believed that it makes most sense to tokenize those assets that people globally already want and that you can use as collateral on chain. Because that's ultimately, I think two benefits of tokenizing an asset is you can open it up to anyone globally because now it lives on blockchain rails and it can move 24/7. And number two is you can use it in smart contracts. Most of the smart contracts on chain leverage, the asset as some form of collateral, whether that's for staking, for margin purposes, and the like. So for both of those reasons, you typically need an asset that has very good pricing transparency, right? Like, what is an asset worth? People want to know that whatever it is they're buying it at the right price. And that's really hard to do with assets like real estate, like PE, where there's a lot of information asymmetry. But when you do that for stocks, ETFs, treasury assets, there are incredibly liquid markets out there in TradFi already where pricing discovery occurs. So once you put these things on chain, it's actually pretty straightforward to figure out what these things should be worth. So that's kind of why we put stocks and ETFs on chain in the first place. Because people feel very comfortable buying them. So if you get all of a sudden an avenue and a technology that hundreds of millions of people are now going to be able to buy these things almost frictionless, I think there's real potential for that to change market structure down the line. It's kind of very similar to how even the US Secretary of the Treasury now is saying, hey, stable coins, we expect it to create meaningful demand for US treasuries globally over the next 5 to 10 years. I think at some point people will say the same thing, but about increasing demand for US capital markets globally. But how long is that process going to take? I don't know, but it could be very meaningful.
Absolutely. And then, you mentioned the DeFi component. So I can not just hold the asset, but I can put it to work to help me earn additional income and yield and so forth.
100%. And this is where TradFi gets very excited about tokenization, because once it lives on crypto rails, you can tap into new sources of yield that historically were not really available. Essentially, because you disintermediate a lot of people from the process that you would normally do. Like you would take a margin loan, right? Um, and as a result, ultimately, these processes become more efficient. So there's a higher yield to be earned, and there's new sources of yield that you could tap into, particularly if you enable it for these crypto native primitives like staking. So that's where the TradFis really get very excited about how all of this could evolve. I think, again, it's going to take a little bit of time for all of that to play out. Because right now, I mean, we're very excited to put these stocks and ETFs on chain, but I think the reality is that DeFi isn't really built with stocks and ETFs in mind. Like the simple scale that these things operate at, I don't think DeFi was particularly well designed for. So take your brokerage account, right? I have a brokerage account. I've got two actually. And I can buy, let's say, 1,000 or so assets, maybe even more in them. And then I just hit a button if I ever want to get a margin loan, and it just happens automatically. No gas fees paid, like it's no problem. It can look at the 1,000 assets that I hold, and I can get margin on all of them, so to speak. That's not really how DeFi is built, right? If I have 1,000 different stocks and ETFs and I want to get margin on it, I can't just hit a button with no gas fees and then get a margin loan 24/7 on my holdings. I think there's going to be some changes that are required in the DeFi ecosystem to really work with the scale of stocks and ETFs. But I have no doubt that a very eager developer ecosystem is going to adapt to that pretty quickly. Now that these things are actually on chain at the right price with deep liquidity, with the right structure, I think it's actually going to be very exciting to see how the DeFi ecosystem evolves.
Yeah, absolutely. And as you're saying that it will take time. I'm envisioning 20 years from now, potentially, after institutions have set up the infrastructure, folks like yourself and Ondo have set up the infrastructure. It's very easy. I could take a rare baseball card, a Mickey Mantle rookie card, or a rare comic book, or an old Ferrari that's worth a lot of money. Take it to a proper institution like Ondo, whatever it may be. You go through the whole process. You're holding the asset. It's verified on the blockchain, and I can put that asset to work.
Ultimately, down the line, if you really go 20 years down the line, sure, I think all of that is going to be possible. For some of the assets that you highlighted, I think it's really going to be how much is that thing worth and pricing it right in a way that even a DeFi protocol or an Oracle could get comfortable with. Um, but there's nothing like the process of tokenization in and of itself, even today, is actually pretty straightforward, right? All you got to do is take a traditional asset, put it in a custody account, whether that's a bank account or a clearing broker account or whatever the appropriate custody account is. Make sure that you immobilize it, you issue a token against it, and ta-da, right? You've tokenized the asset. That's actually pretty straightforward.
Mm.
The hard part oftentimes is doing the pricing of that asset on an real-time basis and doing the subscription and redemption into the between the traditional world and the on-chain world in a 24/7 manner. Because a lot of these TradFi systems that you need to tap into to acquire an asset or sell an asset, they don't work 24/7,
Right.
whereas the crypto ecosystem does. So that liquidity mismatch and how you bridge that, that's the really hard part.
Yeah, that makes sense. And setting up the market for it and so forth. And there has to be demand for the asset, of course. You mentioned 24/7 markets. Clearly, that's the direction the puck is heading in. I see these stock exchanges,
Mhm.
exploring ways to open longer, and it's so fascinating to see them, getting disrupted in a way, and they're trying to catch up and so forth. Um, do you think by 2030 we're going to have full 24/7, 365-day markets?
Hmm. Probably, to be honest. I think Nasdaq already announced. I think they're going to go for 6 days a week,
Mm.
starting next year. And I think it's just really clear that there is ultimately retail appetite to trade 24/7. And right now, you're in a situation where crypto markets are operating 24/7. People love to trade the meme coins over the weekend, Bitcoin over the weekend, whatever it is they want to do over the weekend. And then you look at the traditional financial markets, which are far larger in size still, um, but they don't. It's a very weird dichotomy. So I think you'll see that the traditional exchanges see some pressure to move towards 24/7 increasingly, particularly once the stocks and ETFs are now moving on these blockchain rails that can move 24/7. I think there's a real chance that the crypto ecosystem moves towards 24/7 trading of these assets already, even before the traditional brokerage accounts do. And then over the next 5 years, you start seeing those traditional financial systems actually catch up and upgrade so that they can support 24/7 as well.
Yeah, great point. Because many of the crypto exchanges out there are launching tokenized stocks, and it'll trade just like crypto assets 24/7.
That's right.
And then, obviously, with a 24/7 market, no nights and weekends and all these things, and no opening and closing bell. Are we going to drive ourselves nuts? Right? I'm going to be up 3 a.m. Bonk, Doge, or we have AI agents doing some work.
hmm Yeah, it's a great question. I'm very curious to see how all of that is going to evolve. I mean, a proponent would just say we're giving investors more choice on when to trade, right? But yeah, it's funny whenever I talk to someone in TradFi or even in fintech, one of the number one questions I typically get is like, but it's 24/7. How do you even deal with that, right? How do you ever relax? And I mean, it takes a little bit of getting used to, but over time, it is what it is. And I think with traditional financial markets, it's kind of going to be the same thing, but it does require very big changes in how a lot of these traditional financial firms operate that are not to be underestimated.
Yeah, and I think humans, we find our way. Sometimes we get sucked into a trend or a technology, it disrupts our lives, and then people start saying complaining, "Oh, this is so bad," but then we figure it out, and our collective knowledge improves. I think we're going through that with social media, right? And the collective knowledge would be like, "Okay, we gotta get balance back in our lives with our devices
100%.
and so forth." So, we'll figure it out.
100%. And you've seen that like, I don't know, there's lots of books about that too, right? Like when the printing press was invented, there was a mass revolution almost in the access to information, which ultimately, unfortunately, led to the religious wars. But it's a good example of like how you had a shock to the system. It took some time to recalibrate, and ultimately, people, the system finds balance again. I think we're seeing a lot of that, but at a very accelerated pace with the internet, social media, now 24/7 networks, and pretty soon AI.
Yeah, absolutely. I want to talk a bit about some of the adoption news that I read for Ondo, like Kinexys by JPMorgan using the Ondo blockchain. Tell us a bit about that and maybe some other examples of institutions using Ondo.
Yeah. So this one kind of fits into the whole how do I connect the on-chain environment, which happens 24/7, to a TradFi environment that normally does not operate 24/7. Now, luckily, JP Morgan's been ahead of the curve and realized a long time ago that they need to have a system that can operate 24/7 that is interoperable with public blockchains so that, if someone wants to move their cash sitting in a JP Morgan account around, they can do that 24/7. And that's essentially what the Kinexys platform is. It's a private Ethereum blockchain that they've implemented years and years ago that can operate 24/7 and where JP Morgan deposits can move around between their clients. We then had a collaboration with JP Morgan and Chainlink as well, where Chainlink provided the infrastructure to connect the Kinexys platform, the 24/7 JP Morgan platform, to the Ondo chain, where a lot of the real world assets live, and where you can have an ecosystem of trading that can happen 24/7. But like that connection between the two is what really needed to get built. So we partnered up with JP Morgan and Chainlink to make that happen so that a transaction could occur where two investors that had an account at Ondo and had an account at JP Morgan could transfer between themselves a tokenized treasury fund on the Ondo chain, yet settle that transaction on the JP Morgan network with cash. So that was the pilot that we did. And it was the first time truly that you would have a public blockchain designed for RWAs really engage with the traditional banking environment that could operate 24/7. And it's all about that like connectivity between the on-chain environment and the TradFi environment. Because as mentioned previously, tokenizing something's pretty easy. You got to learn how to deal with the liquidity mismatch. And these types of pilots really help tackle that liquidity mismatch that normally exists between TradFi and the blockchain world.
That's pretty profound because it seems like the direction we're heading in is that, to your point, building those bridges because some of these institutions like banks, they need their private blockchain networks internally to do their things, which is fine, but they need to bridge to the real world, and you're helping to do that.
100%. There's a lot of debate typically and a lot of skepticism towards private blockchains, which are very healthy. But I think it's because a lot of people look at a private blockchain and say, well, you can't ever have DeFi on it. It's never really going to be a real blockchain. And that's true. But a private blockchain historically has been very helpful for a TradFi to just upgrade their internal system so that they can work 24/7.
Right.
And for that purpose, a private blockchain is great. Like we as an asset issuer, as a tokenization company, I love it when a TradFi has a private blockchain network because then I know their systems, or at least some of their systems, can operate 24/7. And that makes our lives significantly easier to tokenize an asset on a real public blockchain, which can then be integrated into DeFi.
Tell us a bit about the bridge and the settlement and the communication. Is it like atomic settlement? Like, how fast is that happening?
Yeah, so not all these chains aren't necessarily fully synchronized, right? So I think in the case of the JP Morgan pilot, all of this happened, I believe, in 30 seconds.
Mm.
So it's not exactly atomic, but it's pretty close. And like 30 seconds for a crypto person, they're like, wow, I want it in 1 second. But for a TradFi,
Right.
that is like unbelievably fast,
Right.
right? They're used to T+1, T+2
Exactly.
settlement. So JPMorgan was very, very happy with that result.
Oh yeah, absolutely. To your point, like we as crypto folks, I send you right, you get it right away, but that absolutely makes sense that these TradFi institutions, that's night and day for them. And I'm sure as with further iteration and fine tuning, it's going to get down to 5 seconds, 2 seconds.
For sure.
Yeah.
Yeah.
That's amazing. Really great stuff. There was also the Ondo Finance Mastercard partnership recently. You tell us a bit about that.
Yeah, it's very similar actually in its intent. So we partnered up with with Mastercard to be integrated into the Mastercard multi-token network. That one is essentially a network that can where banks can plug into and connect it into their own internal systems so that they can move deposits 24/7. So again, very similar to the Kinexys platform, but this one it's across various banks. Again, the whole purpose of these pilots and agreements and partnerships is that we can connect into TradFi rails that can operate 24/7 so that when the TradFi client wants to subscribe to our tokenized treasury assets that live on public blockchains, they can actually do so with cash in their bank account instead of a stable coin on chain and really pay us 24/7, subscribe to our products 24/7 with the TradFi rails. Like that is a pretty meaningful innovation because there's a lot of institutions out there that, if possible, they'd like to keep at least some cash where they've kept it for years and years and years, yet they still want to subscribe, to our assets and mint them on public blockchains to do a wide variety of things with them. But the MasterCard multi-token network kind of enables these particular institutional clients to stay on their TradFi rails, yet still have them operate 24/7.
Amazing. It's a brave new world, man.
It is.
So
And it's all
fascinating.
happening
Yeah.
quite fast, to be honest.
Yeah.
I mean, a lot of crypto people, I think, are impatient, rightfully so, because the pace of innovation in crypto is incredibly fast and furious. But at least the TradFi standards, all this stuff is happening way faster than these guys are used to. Um, and now with the tokenization of stocks and ETFs and making that available to a global audience, like all of the building blocks right now are there for really meaningful innovation in how capital markets operate and how payments operates, obviously, with stablecoin, right? So
Mhm.
it's going to be very, very interesting to see how the next 5 years are going to evolve.
Speaking of the next 5 years and stablecoins, the Genius Act passed, huge for the industry. Clarity Act coming up this fall. Do you anticipate we're going to see this massive innovation boom because the market has clarity? No one has to look over their shoulder anymore.
Oh, for sure. It's night and day for an institution right now.
Mm.
Because with the Genius Bill passing, everyone kind of looks at that and says, wait a minute, this Congress can actually get stuff passed, and digital assets is important enough to do it. I do think that the Clarity Act may be more impactful than the Genius Act, quite frankly, from a market structure perspective and what TradFis are going to be able to do. But it's clear that this Congress can actually pass bills, and it's clear that digital assets is a priority for the admin. And so, with all of that in mind, all of these TradFis truly are racing towards having a digital asset strategy and starting to implement it because crypto is also starting to be at a scale where it's very, very hard to ignore, right? You're confronted with this ecosystem that keeps growing. Stablecoin TVL is now close to what, 300 billion? Tokenized treasuries is starting to accelerate, almost at 10 billion. There's now stocks and ETFs coming on chain. So a lot of these TradFis look at that and say, interesting. I guess I can't ignore it. Historically, they had the excuse, oh, there's no clarity, regulatory compliance, and the like, but that's pretty soon going to drop. So there's real appetite and interest to move on chain. Uh, so that's why, companies like Ondo are very excited in helping these TradFis move on chain because they often do need partners to do that. These TradFis don't have the capabilities and skill set to do everything by themselves.
I am so curious to see what innovations and things are built over the next 5 years. I know a lot of people are looking when number go up, right? But try to get people like number go up will follow the infrastructure and the building and the adoption and bringing billions of people on chain.
For sure. I was talking recently with Joseph Shalom. I don't think he's going to mind me saying this because he said it on a Twitter Spaces, so it was public already. But he made the point. So Joseph would used to be the head of digital assets at BlackRock. He's now the CEO of SBET. And he made the point about, as putting his former BlackRock hat on as an asset manager. All of a sudden, you have assets now, stocks and the like, that live on public blockchain rails where permissionless innovation is possible. That has never, ever happened before, right? As an asset manager before, you had to figure out how to design and structure products with these very old and clunky TradFi rails. But now you've got all sorts of tech stacks that can operate 24/7 with a DeFi developer ecosystem of thousands that look at this stuff and say, what can I build? That's never happened before in the history of mankind. And so the level of innovation that you're going to see, what people are going to be able to do for what passive investing looks like. If you then throw in AI as well, I think truly what investing is and what you can do is going to change pretty dramatically over the next 5 years. It doesn't mean that mainstream adoption is going to arrive in the next 5 years.
Sure.
But a lot of interesting things will start to happen, and I think it's going to meaningfully disrupt asset management, wealth management, brokerage, robo-advisory, and just broader investing at a global scale in a way that has never happened before.
It's exciting times. And we're going to have to do our next interview in person, man. I enjoyed the conversation a lot. I do have some wrap-up questions here for you. First, if you could create your own metaverse, what would the theme be?
Oh boy, I used to be a very big gamer. So I'd have to go with one of the original Command and Conquer games or something. Go old school. That would be fun.
Rapid fire questions. Favorite food?
I'm Belgian, so I'd have to go with moule frites.
Favorite musician or band?
The Prodigy.
Favorite movie?
The Matrix.
Favorite book?
Atlas Shrugged.
And when you're not working at Ondo, what are you doing for fun?
Oh, I've got a family, 2 young kids, so they take up all the time I have left.
I know how that is. I have a 7-year-old, so my wife and our lives will revolve around her. So
there you go. I love it.
Ian, great stuff. Like I said, we got to do the next one in person, but I really appreciate your thoughts and this is a funny conversation. Thank you so much.
Love it. Thanks so much for having me, Tony. Been a pleasure.